What should you know about investing in the new year? Kelly Pedersen, the founder and CEO of Caissa Wealth Strategies in Bloomington, joins us now with some advice. Let's start with 401ks, because I think a lot of people are concerned. Saw a big drop in December, started out this year with another drop. Talk about that briefly. What should people be thinking about with their 401k?
Well, thanks for having me here, Randy.
You bet.
When you're looking at your portfolio or your 401ks or your IRAs, one of the best things to do is remind yourself that you are a long-term investor. And we know as long-term investors that the U.S. economy is sound, and that sometimes we just have to go through a little bit of a shakeup to find opportunities to make our portfolios better. So keep investing, keep putting in those drips.
So ride the storm.
Keep investing, buy on those dips.
Okay, so let's talk about 2019. Give us 3 tips that we should think about before we invest during this coming year.
So the first tip is always never invest more than you're willing to lose. And secondly, I always say, always work with your advisor to set up a plan. And try to plan ahead so that you don't get caught being greedy in frothy markets like 2017, or that you let fear get the best of you when you're in having dips like this in 2018, 2019.
Okay.
So selling when you have profits and buying into these dips when you have a pullback in the market.
So when you look at this year coming up, what are some of the things you are looking at as ideas in your head as to when's a good time to invest and when not? What are some of the cues that you're following?
Sure. So some of the things we're looking at, and we're watching the Fed closely because we had kind of an anomaly in 2017 where we had a phenomenal market year where we didn't have a pullback. We are usually supposed to have a 13 or 14% pullback. It's happened every year for 25 years, and we didn't have one. So I think investors got very complacent, and we overthink what our risk tolerance is. And so looking back at our risk tolerance and saying, hey, how does this dip feel? Because we really haven't had a big, real pullback, and it's a good time to reassess that. So if we have a little prop up, that maybe you can rebalance your portfolio during that time.
We have about 45 seconds left. If there's something to take away from what happened with Apple today in China, we're hearing a lot about the tech stocks and the struggles that they're having. Give us some thoughts on that.
Yes, so going through 2018, a lot of the tech stocks were driving the entire market. There was a handful, 6 to 10, drove the entire market. 70 to 90% of the returns of the S&P were a handful of stocks. Apple was one of them. They had great earnings growth going throughout the year. And basically what they said in the last couple of days is saying, I'm not going to have exceptional growth next year. I'm just going to have okay growth. And the market is going to react to that because they drive, Apple's a large share of the S&P. So are all those tech stocks.
Okay.
But growth is good anywhere you can get it.
All right, very good. Thank you for being here. We
Thank you,
appreciate
Randy.
it. Let's jump over to Julie and Laura.